The following is a presentation of TFNN.
Good afternoon, folks. Welcome to our May 10th edition of Mastering Probability. A lot to cover today, and so we'll go ahead and get right to it. Maybe, did I say May 10th? May 9th. Sorry about that. It's our May 9th edition of our Mastering Probability webcast. Next one is going to be 2 weeks from today on May 23rd, and I expect that we'll have some fireworks potentially before that, the Friday before that. Today, the areas that I'd like to cover are the lunar and astro cycles that are on the horizon, so that you've got those noted. Go and take a look at the just a neat update on the S&P futures, exactly where the market's at right now. Then I wanted to really follow up on the New York Stock Exchange, the hammer candle that I included in this morning's newsletter. I've gone back and done, I've got all the charts here so that you'll be able to take a look at those, because obviously the show is archived, so you'll be able to go back and take a look at it for those of you that maybe don't have any charting software or can't take the don't have access to the New York Stock Exchange Index, but can go back. And I think it's really, I'll present you the information, and then it may help you in being able to make a decision. I have spent more time just trying to get the charts and get the presentation together. So some of the things, we may find some new things in there just by spending some more time taking a look at it. And then if we have enough time, we'll go back and take a look at the Dow 50-day, 200-day exponential moving average, simply going back to 1929. I may have to really dig for that chart. And then questions and answers. So hopefully everyone can hear me. I would assume somebody would say no if they can't. The upcoming lunar cycle, we just obviously went through this past weekend, Sunday, where we had May 6th, where we had a full moon, beautiful full moon. In fact, it was a super full moon, because what we had was we also had, when the Earth was closest to us, the perigee lunar phase. You can see that came in at 3:23 ephemeris time, and the actual full moon came in at 3:36 ephemeris time as well on Sunday morning. Really ended up being about 10:30 Eastern Standard Time. So it was beautiful, and hopefully you saw it. I know I was watching it actually come up over the horizon off the Atlantic with a nice bottle of wine. And so it was a pretty spectacular all evening. The next cycles to come up are going to be Sunday, when we've got a new moon solar eclipse. So you've got a double whammy there, which is a significant event unto itself, let alone what it is that is going to be coupled with it. So we want to be aware of the Sunday, May 20th time frame, as well as on May 19th. You've got apogee. So we've got apogee occurring Saturday, really at about 11 o'clock in the morning. The new moon coming in on Sunday afternoon, well, Sunday evening, I guess 5 minus 23, 18, so around 6:48 in the evening. And then on top of that, what we also have coming in on Friday is the two planetary index date. So coming up on the 18th, 19th, 20th, so it leaves the window between the 18th and the 21st for some, what should be some pretty spectacular either highs or lows in the marketplace, and so we'll discuss that. Hard to believe that the lunar and the astro-planetary cycles are in place, obviously, for millions of years, if you will. Kind of hard to believe that the big aspect or the big event is going to be the Facebook offering, but you never know. And how does that work out? So the first thing I wanted to really get to today and is the hammer candle. And first I'm going to go through some charts, and then we'll go ahead and I'll pull the go live to the trading system. Actually, before I go to the now let's go ahead. We'll go to the New York Stock Exchange. I was going to switch over to the ES Mini, but let's just go through the charts that I have here on the New York Stock Exchange. In this morning's newsletter, there were a couple of dates that I had mistransposed. The dates that are on here are correct, and I will go ahead and include it in tomorrow's newsletter, just simply so that you have correct dates. I did add a few more as I was gathering charts. What you'll notice, just as I was going through this and getting a snapshot of each of these charts, was kind of interesting that 9/12/11, which was yesterday, and 9/11/08, when you consider that this is a leap year, this yesterday really would have been 9/11/08. Well, I guess you can't really say that, or maybe you can, because of the 4-year leap year happens once every 4 years, right? So, kind of interesting that 4 years to the day. You've got a hammer candle occurring. I also noticed one in February 12th, 2010, February 12th, 2009. Not that necessarily means anything, but I did go ahead and notate that. What's a little bit different than the chart that I put together, or the data that I put together this morning, was this information down here. I've added a few more cycles in 2006. And really what I'm trying to identify here, I really pose two questions. One, did the hammer act as support? And then secondly, did the price move higher after the next session? And there's a real purpose behind whether or not price moves higher and it confirms or not. And you'll see as we go take a look at those results. So what's interesting here is that we do have a few times where it acted as support, the hammer acted as support, and price did not move higher. Certainly that looks like what the outcome of today's market is going to be, although, it's 307 or so. And right now, the market, even though it did come all the way back, pretty close all the way back, right now, the Dow is off 85, the S&P is off 7 points. So you never know what can happen during the last hour of trading here. So let's go to the first chart. This is a current chart, as of maybe about 2 hours ago, and we'll take a look at what the actual current chart looks like. But wanted to make sure that what I'm identifying here is the question I'm posing is, did it act as support? Just simply, did it, in essence, put in a low? And when I talk about a low, I'm talking about the bottom of the hammer candle. You can get where the market pushes down into it, but the question is, did it act as support? And then the question is, did the price on the following day actually close higher? I say, did the price move higher? Really, probably should say, did price close higher on the next session? So if we go to our first date, that is obviously 9/12/2011. So if we go back, a full, I'm thinking this should be 9/12/2012. My apologies. I'll get this right here. Let me go ahead and put this in here. So we don't have the answer on this one yet. We'll come to the live chart when we take a look at that. So let's go to actually the most previous hammer candle, and that most previous hammer candle being August 3rd, 2011. Now, here you have a hammer candle. Here you have what looks like it's a type 2, maybe a type 1 hammer candle, and you can see on the following session, much like we've had today, you had where the market closed lower, and then it continued to move on down. Now, what I've also do have on here is I have the 9-day, 18-day exponential moving average. So the blue line is the 9-day, the red line is the 8-day, which is a good tool to take a look at shorter-term trends. And right now in the current cycle that we're in, we do have where the 9-day crossed through the 18-day just a few trading sessions ago. So what I'd like you to do is probably pay close attention to each of the charts that we take a look at and understand, is the 9-day above the 18-day? Is it in an uptrend or is it in a downtrend when the hammer candle's in here? So based on this, if you're only going to make your decision based on the most previous candle close below, says that there's a lower price to come. In this case here, I happen to just simply show the AB equals CD pattern. This candle here, this hammer candle, as it was being made, it was making a 1-to-1 A to B equals CD pattern. And I'll be spending next Friday a full day with folks taking a look at the AB equals CD pattern, teaching people how to become an expert on the CD and CD leg specifically, and what it is to be looking for. But one of the things that you certainly are looking for is the candle formation as you get down into that area here, as you're making the the D leg. And you don't know whether that D leg is going to be a 1-to-1, a 1-to-2, 1.272, a 1-to-1.618. In this case here, it gave us an indication that it might be a 1-to-1 until the following trading session when the hammer candle did not act as support. Not only did it not act as support, meaning that you had to close below it, but the price did not close above it. So, if you're taking notes, I think you want to notate that. If this is new to you, I would recommend going back and replaying the archive of this and paying attention to those charts if you don't have your own charting software, looking for some characteristics because, you don't see hammer candles appear on the New York Stock Exchange that often, and when you do, to me, I think it's a little bit of a gift for us to be able to make our next trading decision. If we take a look at the one prior to that, we would go back to May 17th, 2011. So the market was moving down May 17th, 2011, even though you had the 9-day underneath. It had crossed over a few sessions before, similar to what we have right now. But what you can see is you did get a close above it. Now, you did get a close above it. It did act as support. But in this case here, with the 9-day being over the 18-day, you can see you only had one more session with higher price, that higher price running right into the 18-day moving average. In this case here, anytime you have a close below a hammer candle, I recommend that you would exit that specific. If you were long, one of the ETFs, that you would go ahead and, for an index, that you would go ahead and exit that. So here is the May 17th. It did act as support. It did act as support for a few days. Let's take a look at the prior session, which would be May 25th, 2010. So May 25th, 2010, this is quite a hammer candle. As you can imagine on this day here with the market pushing down, obviously, this shows that the 9-day below the 18-day. But, picture this where the market was, after making some substantial moves to the downside, the market really pushed down. So a little bit of fear, most likely, in the marketplace. When will this stop? And you can see how the bulls in the marketplace came in and pushed up on this. However, what you did get on the following session was price did not close above that hammer candle. It did not close above it. You did have price move up and go a little bit sideways. It did act as support with the exception of 1 day that's out there. And you have a hammer candle like this. This is telling you that there's going to be really pretty good support in there by the bulls. It's not often that you'll see a hammer candle like this where, it opens at in almost the session high, pushes all the way down. That's quite a large push in the New York Stock Exchange, only to go ahead and push back up. If you take a look at the hammer candle, then previous to that, you'd go back to February 12th, 2010. So February 12th, 2010, you have this hammer candle. It's coming down off of a downtrend. This is a hammer candle. This one does not qualify. This is a hammer candle. This is one of our type 3 hammer candles out there. You then, not only do you get a close higher, but you have another bullish candle sign. That bullish candle sign coming in right here being a bullish engulfing. And then obviously this certainly did act as support. The market moved up. You can see that when you did have the hammer candle form, you did have the 9-day below the 18-day. You then get that confirmation, and a few trading sessions later, it was off to the races. If we go back and take a look at the February time frame in 2010, so you have February 25th. I'm sorry, this was a hammer candle. I think I said that it wasn't. And we go back and we take a look at this hammer candle as well on February 5th, 2010. Price, this acted as support, but price, closed lower on the trading session. This is another one of those anomalies. I won't say anomalies, but to me, it's not the type of confirmation that you're looking for. You'd like to see a close higher, just like in this case here, just like in the hammer candle that we looked at right back here, where you had such a long wick on it, such a lower shadow. It really does show you the strength of the bulls that were in the marketplace. So again, here you've got the bulls in the marketplace. You did have a close lower at this stage here without a confirmation. You didn't really have to enter the market and go long. You could have waited for some additional signal. Certainly had an additional signal that came in with the hammer candle that presented itself here in February. Let's see, that one happened to be February 10th, I believe, to February 12th, 2010. If we go take a look at the hammer candle prior to that trading session, that would take us back to January 27th, 2010. So if we take a look at the January 27th, 2010 hammer candle, that is this one right here where my cursor is at. So you can see price moving down, the 9-day, underneath the 18-day exponential moving average. You do not get a confirmation on that following session, and obviously price continued to move down. It moved down into this hammer candle. You didn't get price confirmation, but you did certainly get it right about here. Again, hopefully at this stage, we're going to continue to go through many more of these. This is giving you a pretty good indication of the power of this candle and whether you should be in the market, out of the market, in cash, looking for a short position, or what have you. So let's go take a look at the next one in line. Takes us back to December 9th, 09. And we know that we had made a low in the marketplace in March of 09. So here in December of 09, you had that would be this candle right here. Market moves down into this area. You get a confirmation with a close above this area. This certainly acts as support, and the market runs up. Looks like it probably was completed in an ABC pattern or some type of expansion of swing points. But you can see here you get a close higher, acts as support, and that's really what you're looking for. That's what, in my opinion, that's what you're looking for as confirmation. So let's go take a look at the next one that we have, which will take us back into the November 3rd, 2009 time frame. So November 3rd, 2009, 9-day down below the 18-day. You have the hammer candle put in right here. The following session, you have a close above. You can see during this session here, moved up into the 18-day. You had the bears come in, try to push it down again, but you did have a close above. Market moves higher, makes a 100% move of a move. Let's go take a look at the the next candle that comes in, next hammer candle that comes in. That takes us back to July 6th of 2009. So July 6th of 2009 is this hammer candle right here. So here comes the hammer candle. The hammer candle gets a close below it, so you don't have confirmation the price is going to move up. You've got the 9-day underneath the 18-day. At that stage, if you had not taken a long position, let's say that you were not in the market at that stage, you had the hammer candle come in. If you had waited 4 or 5 sessions, you would have gotten a confirmation. And, you know, the two candles that we really pay attention to, that we take a look at, the hammer and the bullish engulfing candle. This candle here engulfs 1, 2, 3 trading sessions, you know, at a low. And the hammer candle here was telling you that you had some strength by the bulls. When you had the bullish engulfing show up, it showed that the bulls were back in. You get a even though we're really discussing hammer candles here, you do get a close higher the following trading session, and then boom, you were off to the races. Let's go back and take a look at the next prior hammer candle that occurs in the New York Stock Exchange. That's the one that is from February 12th, 2009. February 12th, 2009, you have this hammer candle coming in right here. We know that the lows were put in down here in the March time frame of 2009. Market obviously having moved down quite substantially in the New York Stock Exchange. You put in a beautiful hammer candle. You can see the bulls were buying this, from time to time, trying to push the market up. And the following trading session, you get a close below it. You don't get a confirmation. In this case here, it suggests to me, being long, you're on the wrong side. You also have the 9-day underneath the 18-day exponential moving average. If we go take a look at the next hammer candle that comes into the trading session, next hammer candle coming in on February the 9th, 2009. Here is the February 9th, 2009 time frame. February 9th, you do get a close above, and the market does move higher. Now, when it moves higher, it does a normal thing, which makes a 100% move of a move, and you can see that as it was completing that pattern, it was losing energy when you had this candle right here on this day, when you had a doji candle as you were making 100% move. Looks like it makes an evening star, very bearish sign, and then that previous hammer candle that we're looking at gave up on price as well. Let's go take a look at the next one that we have out there. That's the hammer candle from October 1st, 2008. So you've got the market moving down. Here is the hammer candle from October 1st. You are the 9-day below the 18-day. You get a no confirmation of price moving higher by having a close below. Market continues to drift downward. So hopefully you're seeing some patterns here. You're seeing the importance of identifying a hammer candle, the importance of getting confirmation, either way. So that's why these candles are really great. You're not going to, they're really great by being able to provide information to you as to who's really in control of the market when they show up. You know, is it the bulls or is it the bears? So let's go to the hammer candle that takes place prior to that. That's in September 11th, 2008. So as we go back to September 11th, 2008, you have a hammer candle that comes in. You get confirmation in the next trading session. In this case here, you got the confirmation, but it didn't work, and your stop would have been a close below that hammer candle. If you were trading the New York Stock Exchange, or really anything that you're trading out there, you would want to go ahead and take a look at. That. Let me take a quick second here to read a posting. Does reading the volume along with the pattern formations help refine the conclusions we get with the hammer candles? The volume today and the Q seem awfully high, making me uncomfortable with the TYH trade. But on the other hand, we may be setting up a bullish engulfing on the daily. Well, we'll take a look at the Rocco. It's a good question, and we'll take a look at those trades a little bit further on in the program. But I don't have access. The charting software in the data feed doesn't give me volume on the New York Stock Exchange to be able to put into the chart to be able to help to answer that question. I think, though, that you just simply can take a look at the hammer candle that is out there, understand that the bulls are coming in, and if you get price close above, it's giving you on the following day, you've got a confirmation, and use the right money management strategy. I think that you're going to be further ahead of the game by doing that, and if you get a close below, it's telling you that there's still lower prices to come. You always have to take a look at the left-hand side of the chart to see what you're coming up against, to see if there's any type of support. So once you're in the trade, you got to manage the trade accordingly with any other patterns that might be out there. And I think that's the best way to manage that. The tick reading, I'm not going to probably spend too much time on the tick reading there. So let me continue on here, and I want to go take a look at the next session with a hammer candle, which takes us to September 11th, 2008. So September 11th, 2008, I don't think I covered that twice, did I? I may have covered that twice. Okay, didn't mean to do that. Somehow I have September 11th, 2008 in there twice. So let's go to September 5th, 2008. So September 5th, 2008, that takes us to this hammer candle here. You can see you do get price moving up here, and you do have a failure because price continues to move back down. And so you've got two trades in a row here where you got confirmation, and it only lasted for 1 day. But those are, to me, that's just part of the probability game. And in this case here, when it moved higher, really wouldn't have given any indication, in my opinion, that it wouldn't have at least moved up to make a 100% move coming up into this area here. If we take a look at the hammer candle preceding this one, which is July 1st, 2008, here, as the market is moving down, you make a hammer candle, a type 3 hammer candle. You get a close below. And when I say close below, folks, I'm not really talking about a close below the wick, just simply lower price on the following day. You get lower price on the following day, and the market continues to move down. So you have a failure here, plus you have the 9-day underneath the 18-day. If we go take a look at May 7, 2008 candle, is going to hammer candle is going to be this one. You get a close back above it, and it lasts for 2 more trading sessions. Really acts as support here for 1, 2, 3, 4, 5 trading sessions. But again, this is what you're looking for. You're looking for this confirmation. I think it's important paying attention to the 9 and 18 day. Exponential moving average, even though it's the shorter term time frame. I think if you go back and take a look at these charts and take a look at where the 9 and the 18 day exponential moving average, I think that is just as helpful as anything else. Let me see, I lost my space. Okay, so let's take a look at the January 23rd time frame. January 23rd, you've got a hammer candle that comes in here. You do get price moving up again 9 days underneath the 18 day, and it just simply looks like it probably did some type of retracement. Looks like this is probably only about a 0.382, maybe it's a 0.618 retracement up into this area. But as the price is moving up, you never have the 18 day, the 9 day cross back over the 18 day moving average. So it does last for a few days, and I think you've got to really be paying attention to that. If we take a look at the next preceding one, you're looking at December. You're looking at December 13th, 2007. If I see Janice's question here, it says, "Is it best to put your stop at the bottom of the hammer candle?" And the way that I trade hammer candles is if you get a close below the hammer candle, you would go ahead and exit the trade. So in that case there, I would leave the stop in place wherever your stop is. And if you are trading and you have a stop that's above the hammer candle, the bottom of the hammer, intraday, you should look at widening the stop. If you even if you use the position size calculator, because some of the problems that you might have with the hammer candle, if you take a look at this one down here in January of January 22nd or so when this came in, by the time you enter the trade by waiting for the confirmation, and let's say you entered the trade here in the following session, this is a long way down to have your stop. So your stop is probably going to be, more than 1.618 outside of that. Maybe about 3-4 sessions ago, I did a webcast where I devoted more time to the hammer candle and the trading pattern, that trading pattern. And you should go back and listen to the archive session of that. I wish I knew the date off the top of my head for you, Janice. But what you typically are looking for, one of the best ways to trade these hammers, at least on I haven't traded them off of the New York Stock Exchange, so I'm usually looking at those on stocks, maybe intraday. And the most conservative way to trade is to wait for price to move back into it. And usually what you're looking for is you're looking for price to come into the midpoint of the area, and that usually happens in days 3 through 8. But if you are in a trade, what you need to be aware of is that the real support of whatever it is you're trading is going to be a close below a hammer candle. So hopefully that helps to answer your question. So I don't recall if on December 13th, 2007, let me just cover that if I did this already. I apologize. You did have this type 3 hammer candle come in, and the following trading session it gave way and obviously led to lower prices. If we take a look at the one from October of 22nd, 2007, the October 27, 2007 would take us right down here. The next session, we get a confirmation. It moves up, and you do have price starting to move up the 9-day, crossing through the 18, and it goes ahead and makes a 100% move. And when we talk about 100% move, I'm not necessarily talking about making it exactly to the top. I'm really talking about getting inside the swing point. So, there are times where you have to make a decision. Even if you have a hammer candle, you wait for confirmation. You do need to be paying attention to the left side of the chart and where you're running into just some normal resistance areas. It may not be worth the reward to risk to take a trade here, knowing that what you're more likely to do is move into a 100% move where it's going to go ahead and pull back. So sometimes when you have these candles out there. Again, you don't want to lose track of not paying attention to the left-hand side of the chart. And that's when we switch over to today's live chart. When we start taking a look at what's on the left-hand side of the chart, we're going to find out there's not a whole lot of support on the way down. If we take a look at August 16, 2007, we're going to see, again, one heck of a hammer candle that's out there. In this case here, when I say one heck of it, a heck of a hammer candle, because look how far price was pushed down. I remember this day absolutely specifically because it was the day when I was short and flipped into going long the market. And this is also a real important day because once this low was broken, August 16, 2007, it really had set off the beginning of the bear market, because this day here was also a large astro day. It was a astro day that for over 200 years, the low that came in on this day was had not been broken for 200 years. So it was a fairly easy day to buy. It was, and then it was also a very important day to note. And it's noted on my charts. It's noted. I have that noted in the section where I'm determining whether the market posture should be bullish or bearish. And so I referenced the August 16th date in there. So you'll know the next time that you take a look at that chart, you'll know why I've noted that. That's really specifically this specific day here. You do get a confirmation the following day, and then the market proceeds to make up. And again, if you just take a look at the left-hand side of the chart, you can see the market moves up and in essence makes a 100% move. Makes a little bit extended, but once you make a 100% move, you're typically going to do something like pull back, and that's certainly what happened here. If you take a look at the hammer candle that came in on March 14th, 2007, you get a confirmation here the next session, and boom, the market moves up. You can see when it makes this 100% move, we're very close to it. Market pulls back a little bit, and continues upward. And it's very common when you make this 100% move, you're just really trying to measure the pullback here. You can see, this day here, this session right here, it's not a hammer candle, but it is a candle that certainly tells you that the bulls are still in control. So even after you've made this move, even after you have this doji, even after you have a kind of a smaller body here, this day here says, hey, you know what, the bulls are still in control. So this little pullback here, into these moving averages was no indication that the bears were in control of the trading session yet, and certainly that's the way that it played out. As you take a look at the March 1st hammer candle today, March 1st, we had March 14th before. Let me make sure. Yeah, March 14th. March 1st, nice big hammer candle. You can see we've got this one right here. Also, here's one, the preceding one, which is really going to be January 10th. No, it can't be. This is the March. I'm sorry. All I have to do is pay attention. So this is the March 1st hammer candle. My apologies. This is the March 1st hammer candle here. You get a close below it. Market moves further down. All you do is just simply wait for your next confirmation, which is either going to be a bullish engulfing candle or a hammer candle. Those are going to be the two best to look at. Doesn't mean that the market can't move higher, but those are the two best to be watching. Let's take a look at January 10th, 2007. And January 10, 2007 takes us over here where you get a confirmation the next day with the price moving higher, and then the following day you've got the 9-day moving up into the 18. So, from a trading standpoint, really important to, I think, just use a couple of very simple tools. Using the hammer candle, getting confirmations from price, understanding where you're at on the 9 and 18, and very specific, and also making sure you understand where you're going up against, where you're going to get a 100% move, and just trying to put together. Also, you want to take a look at any ABCD patterns that might also be out there. So you just use your typical tools that we use day in, day out to take a look at how to identify a trade setup. If we go back to November 2nd, 2006, you've got this hammer candle here. You've got the market moving down. You have the 9-day over the 18. You're already trending higher. This one here, you do not get a close above it. However, this I don't have it marked here, but you do have a bullish engulfing candle right here. So you got a bullish engulfing candle engulfing quite a few trading sessions. So that was pretty strong coming after, 2 trading sessions after the hammer candle that was out there. Let's take a look at August 10th, 2006. August 10th, 2006 would take us into this hammer candle, 9-day being above the 18-day. You do not get confirmation here. And so you really, and there is no other candle formation. This is not a bullish engulfing candle. But this is one where market did move down further, but so the following trading session, you don't get confirmation. But what I see here as I was going through getting these charts, trying to and preparing for today's webcast, the importance of understanding the 9-day and the 18-day. So that's why I say it would make sense for you to go back and also take a look at these charts. I know I'm going to do that as well to glean any additional pieces of information, just simply to help us with trading and anything that I can pass on to you. But I'd recommend going back and taking a look at these charts or going ahead and posting these dates on your charts so that you have them on your system. If we go back now to June 8th, 2006, June 8th, 2006, 9-day underneath the 18, got a nice type 3 hammer candle that comes in, closed slightly below it, and the market continues to move further down. So either way, whether these are failing or whether they're succeeding, they're giving us really great information. In my opinion, they're giving us great information. Go back to March 8th, 2006, and in March 8th, 2006, and this is the last hammer candle I believe that we are looking at here and then we're going to switch over to some live charts. So March 8th, 2006, you have the market moving down into this hammer candle, 9-day, still just slightly above the 18-day. You don't get confirmation the following day, but you do get it with a bullish engulfing candle on that next trading session, and boom, off to the races. So let me, while I go switch over to some other charts, are there some other questions that any of you might have about these hammer candles and anything that I've said that possibly might have confused you? And for all those folks that are listening to the archive, please always feel free to send me an email, and I'll be happy to respond back to you. So I'm going to go ahead and switch over to the live chart so we can see what it is that we're looking at right now. Okay. So let's pull up the live charts, and let's first go take a look at the New York Stock Exchange. So let's take a look at where it is that we're at today. So based on what I've shown you so far, knowing that we had a nice hammer candle come in yesterday after the market was making 100% move on the way down. Number one, I would have expected after making a move, after making a hammer candle in the New York Stock Exchange, that what we would have seen today was a higher close. There's still 20 minutes left in the trading session. Anything can happen, but it doesn't look to me like we're going to have a higher close. So based on that, I cannot see being long any index. In fact, what we might want to do is take a look at going short the marketplace. And what that does mean, I think Rocco asked a question, and I think right now it would be advisable. We're going to take a look at the TYH, which is a little bit positive. It's up a quarter right now off of yesterday, and we'll go take a look at the ETFs. But I think, based on taking a look at the way that the New York Stock Exchange has traded. Now, what you also see is, and you got to recognize that we do have a 1-to-1 A to B equals CD down that's completing here at 77.25. However, knowing that we're going to have a failure of this hammer candle with a price closing below, and what I was mentioning earlier is, you see, once we're underneath this swing point, this April 10th swing point, and when you take a look at the New York Stock Exchange, your next level of support is all the way down here, your next swing point, which is 71.63. So you're at 78.31 right now, and the 71.63 area, would be a 1-to-2 A to B equals CD on the way down. And as you take a look at, you've got price moving along the inside here. There's nothing really to stop this on the New York Stock Exchange. Nothing at all. that I can see, other than the fact of making a 1-to-1 A to B equals CD. So based on what it is that we've just looked at, my opinion is that what we should look to is, if the market moves up into the close, that would be an opportunity to go ahead and get a better price and taking a short position in the market. But I cannot see, this should have acted differently, especially with the 9-day being below the 18-day, especially, having tested and rejecting yesterday the swing point down here from April the 10th. And that hasn't happened today. We are in the right sector, which is the technology sector, and that's why even with the market being down, that's still positive today. But, I think we're better off taking the trade off, taking whatever little profit it is that we have in that trade, and either staying in cash at this stage, because it does look to me like the market is setting up for a much larger move down, or wait for a retracement, wait for a potential retracement to go ahead and go short. But that's to me what the hammer candle from the New York Stock Exchange, which is so important, is telling me. So that's on the New York Stock Exchange. On the larger picture of the New York Stock Exchange, the larger picture, if I take a look at that, ends up being this, which I pointed out as we came into the end of the month. What we have out here, which you don't have too often inside the New York Stock Exchange, just happens to be a bearish engulfing candle. Now, the stock, this is only the 9th of May, so we got a long time to go. But a close below this, sends off another signal that the market is simply going to go ahead and move down. It's going to at least move down into this candle here, going all the way back to the October 4th lows. This is the month of October's candle. You can see also that right now, from a monthly standpoint, you're now trading into the top of the candle. That top is 78.64, and you can't really see it. I need to probably move this in a bit so you can see price. Let me do that for you. My apologies. Okay, so now you can see that the top of this candle here, I'll just draw a line, you're trading inside it right now. Again, this is the monthly chart. Put that line there, but you are trading below that. If I also go ahead and put from a moving average standpoint, from the longer term view, let me change this here, and the 50 and 200 day, oh shoot, this is the monthly chart. I'm not going to do that here because I have to convert it. So I'm not going to do that here. Let me switch over to let's go switch over to the ETF. So let's go take a look at the ETFs, and we'll go take a look at Molycorp and TYH, and take a look at possibly what's going on out there. And looks like we're getting a little bit of a bump here, so that's good. So let's take a look at the weak hands that are out there. Really are the Qs. Rocco brought up the Qs, so let's go take a look at the Qs first. And what the Qs are doing, the Qs are rejecting the March 6th swing point. So, we got a little bit of divergence. When I say rejecting it, if you take a look at this March 6th swing point, those are the two red lines going across the top and the bottom here. And, what the Qs have done is they've tested that bottom now 4 times. So that low is 78.41. You got 80 million here. That's the red line going across. You come down and you test it. You actually close below it on 101 million shares, and the market moves up. The market, the next time that you come down and you test it with this hammer candle, 62 million shares. That's 62 million, going against the 80. So tested on lighter volume, market moves back up. Yesterday, though, you tested it on 62 million. So that's 62 million going against this 80 million. Okay, similar to last time, potentially setting up a rejection of price. If we take a look at, it did test this area here, right? So test the April 10th area, test that on lighter volume, because that had 101 million shares. And so yesterday, you've got a test with 62 million shares. This is the IWM. Geez, thanks. Sorry about that, SJ. Well, it is the IWM. I'll pull up the cues next. But let's continue with the IWM because this is the weak hands also in the marketplace. So the IWM, the small caps, are rejecting that March 6th swing point. And even today, with 12 minutes coming in the trading session, you are rejecting price here. Let me go find the cues. So I apologize. And actually, then what I'm going to do is I'm going to switch over to the XLK because that's really what our trade is based on. It's really based on the XLK, the TYH trade. So let me go ahead and pull up the cues here. My apologies for the confusion. The cues, testing that March 6th area with higher volume. Says it's going to be back down there at some point in time. It had higher volume yesterday, higher volume today, as you can see. Still rejecting it on price, but it is still going to head back down there. Likewise, if I switch over now to the actual sector, the XLK, so let's pull that up and see what you're doing. See, in the XLK, and even if I switch over to Apple, we'll see that Apple probably doesn't have volume today. So as this was coming into the March 6th area yesterday and, was taking a look at the possibility of the candle setups that were there as well as what was going on in the ES Mini, and I'll switch over to that real quickly. You can see coming into this area here, we had 14 million shares. You came into that yesterday with 10 million shares, rejected it. Today, you're coming in with 9.7 million. So it's going to have 10, maybe 10.5, 11 million, something like that. But you're going to close back above it, and it's rejecting it. And you're also testing the swing point from April 23rd. So the XLK is giving us the best signal to go long. The problem is when we take a look at the hammer candle, look, I can't give you 100% certainty. What I can do is give you the odds and let you take a look at what the market is communicating to us so that you can help to make the best trade that is right for you. But in my opinion at this stage, the broader market is telling us, even though this is acting strong, this sector is acting strong, the broader market is saying that it wants to seek out lower prices. And it really ends up being about the dollar index. And the dollar index, and the reason why the market hasn't totally given up today is because the dollar index has made 100% move. You can see it got just slightly above it. I just wipe away some of these things out here. And you can see that what the dollar index has done is just made that 100% move, which is just normal for anything that you would trade. And once you do that, it usually does something a little bit different and backs off a bit. So let's go take a look at Molycorp and see what Molycorp is doing. They do have earnings released tomorrow, but this has not responded the way that I would have liked to have seen it. MCP. And, what it's done, the nice thing that it's done is it came back into this area. This is a nice sign of strength. And when you do have a equity come back into the actual breakout, which is this March 8th area, which had 2.8 million shares, and it came down into that area with 2.8 million, as was coming down the prior session, 1.9 million. Today, you've got 2.1 million, and it looks like it may have tested the bottom. That low was 2470. The low that it got to today, 2470. So, with yesterday coming back with similar volume, when you're coming back into a breakout area, the gift is if you can come back in here with lighter volume, as it tested it on this session here when it came with 1.9 million. But what you're really going against this volume. You're really going against the 17 million shares that are out there. So it's still a nice setup. But if the broad markets are going to trade lower, it's going to take everything with it. And so my suggestion at this stage, the way that this has responded, earnings coming out tomorrow, let's go ahead and just limit our losses. We have a loss in this, small loss in this, but my recommendation is to go ahead and close it out before the end of the trading session and just simply take a small loss. With regard to the XLK, the TYH trade that we have out here, TYH, is you've got a little bit of a profit in here. I can make all the case in the world why we should stay in the trade, with the exception of the way that the New York Stock Exchange is going to likely close today. So I would suggest, let's go ahead and take our profit off the table on that trade as well. That's my recommendation. If we take a look at the ES Mini here, are there any questions? You might, because I only have just a few minutes. I need to get set up. I'm going to be doing the shows with Tom today, so I need to get prepared for that. Are there any questions that you might have out there? I'll take the silence. Of course, you could be typing. I'm going to go ahead and just talk about the ES Mini. If there's a question that pops up, I'll get to it. And you can always send me an email, as always. Now, when we take a look at the ES Mini this morning, what occurred was this hammer, the two hammer candles going back to Sunday evening, was penetrated with a down thrust at 10:30, and it was followed up from 10:30 to 11. Now it made a 1 to 1.272 A to B equals CD as the market was moving down, and I drew in the 1 to 1 A to B equals CD this morning as the market was moving down here. And part of showing you how to buy and sell the D point, you did not get a confirmation. You did not get a confirmation as it was making the 1 to 1 move, meaning you did not have any kind of bullish candle. How could you have entered this morning? How could you have entered this morning? I'm not sure. Glenn, what do you mean, how could you have entered this morning? The ES. The way that you could have entered the ES this morning after it made the 1 to 1.272, you got a bullish confirmation right here. You got a bullish confirmation between 10:30 and 11, and then you had confirmation coming into this trading session from 11 to 11:30. And then you just simply would have had to have made your decision at that stage. So you did get the bullish engulfing candle. If you had waited. One of the things that I do teach you how to trade is the perigee line. And what I'm now taking a look at is when you have perigee or apogee occur over a weekend, the problem is you don't know if it's the close on Friday or if it's the open on Sunday that the line should be, where the line should be. In our case here, I had originally put it in at the open on Sunday, and the open on Sunday would have said that if the price is above it, you should be long. If price is below it, you should be short. Now, having watched it trade for the last 2.5 days, what I noticed is that really it looks to me like the line of perigee should be at the close of Friday's trading session. And that's the problem when it comes in over the weekend. You're not exactly sure where to identify the line. And so the one possible way, Glenn, to answer that question is you're waiting for a confirmation as you make your AB equals CD pattern. In this case here, it was a bullish engulfing, and then you're looking for a confirmation. Unfortunately, price really ran away from you, so you really wouldn't have, in my opinion, you really wouldn't have had a trade going into the ES Mini this morning. Risk to reward. I wasn't sure how to place a stop to go long because it went so fast. Exactly. So when it went so far, so fast, what you're looking for is at least a 5 point, a $250 risk. So when you are trading the ES Mini, for the average true range, you want to use at least 5 points on any trade. And then you're going to use the left side of the chart as well, just to try to identify where the equity might trade to. Because remember, what's going to happen is you're going to do 100% move of a move. And if you take a look at this, that's exactly what occurred, right? So you get the confirmation on this candle. Next candle, all it does is 100% move of a move, and then it pulls back. So always pay attention to the swing points that are out there, the major swing points. So, folks, if it's okay with you, I need to go prepare for the next hour or two. Thanks for your attendance. Again, send me an email if you have any questions, and have a great evening. Take care. Bye-bye now.